Aloha, YouTube investors. How are you doing today? My name is David Yansen. Welcome to my channel. Today is November 1st. It is Sunday, 2020, and we are talking earnings because it is earnings season. So I've been going through my three main portfolios and going through all of my holdings and sharing you what their earnings are for their respective quarters. So whether it's fiscal year quarter one 2021 or fiscal year 2020 quarter three, some are quarter four, just depends on the holding that I have. So for this video we're going to be talking Activision Blizzard. Activision Blizzard is a gaming company if you aren't familiar with them. I own them in my Robinhood portfolio here. I also own EA games in my Robinhood portfolio. Market cap for these guys, 58.45 billion. Price to earnings ratio is kind of high, but I think some of that is just because the stay-at-home economy has encouraged people to buy more consoles and buy more games, and so these gaming stocks have done really, really well over the last 6-7 months. They do pay a very, very small dividend of 0.54%, and they're based out of Santa Monica, California. So if you aren't familiar with EA Games, Activision, they are best known for Call of Duty. And Call of Duty Warfare, this came out in 2020. This is kind of a remake, maybe a reboot, a remake of the original Call of Duty game. I think it was 2015 or 2016 that it first came out. And this is their best-selling game, and one of the best-selling games of all time. So I know you've got Fortnite and you've got some other games that are huge, the Rainbow Six games and stuff like that. But this franchise, Call of Duty, goes all the way back to the World War Ones, and then eventually they came out with the Modern Warfare, and they have Infinity War and stuff like that. And now they have another Call of Duty that's going to drop this month, November 13th. Black Ops Cold War. So the beta version for the multiplayer is already online. I've watched some of the videos. I think it's kind of cool. I even played a little bit of the beta version. I'm not really good at video games, so I don't spend a whole lot of time playing the games that I'm not that great on. Like Madden, I will play in franchise mode, and then another campaign mode game that I play is Wildlands, Tom Clancy's Wildlands. So I kind of like the more realistic games, but these are their Call of Duty is their biggest franchise. World of Warcraft is also another one of their well-known franchises that they own. And Crash Bandicoot isn't a bad game. I watched some videos on Crash Bandicoot and also this Tony Hawk's, and some of the reviews were saying that they really like that there is another Tony Hawk game coming out, and that this Crash Bandicoot game is really good as well too. So the video gaming industry is like $200 billion. It might even be a little bit more. It might even be just quite a little bit less, but it's a $200 billion industry. And Activision Blizzard does Xbox games, does PlayStation games, and they also have some PC games as well too. So I got in when it was trading at about 77 bucks. I put in about $15 or so, somewhere around there. I recently added another 33 bucks. This last week I sold out of Norwegian Cruise Line, as I think that stock will still be in the teens if I decide to go back into Norwegian Cruise Lines. The reason why I didn't buy into EA Games or Activision Blizzard back in March or April or even May when I really wanted to is because the stock market was down and my Roth IRA has been my priority. So I was trying to dollar cost average into a lot of my holdings for my Roth IRA and for my Fidelity account as well too. And I have playlists for you if you want to check the playlist on all my different brokerages that I have. I have some smaller ones like Webull that I signed up just for the free stock, so you can look at those as well too. But Fidelity, Robinhood, and M1 Finance are my three main brokerages. So I wasn't really trying to add anything new as I was trying to build out. And I also was making some changes with those accounts as well too. So I removed Ford, I removed Apple Hospitality, I removed a lot of companies that I'd bought into when I first started investing with Robinhood and M1 Finance back in June and July of last year. And for the most part, I didn't really know what I was doing. So as I was growing as an investor, because I've only been doing this about 15, 16 months now, I started to learn more. And so when the stock market crashed, I was like, okay, I know more, so I might as well get rid of Ford. They cut their dividend. Might as well get rid of some of these other ETFs that weren't really performing very well anyway. But I got them because they were kind of cheaper. So that's why I didn't get into Activision or EA games way back then, because I was still trying to build out my Verizon, Procter and Gamble, my real estate investment trusts, realty income companies like that. So now I did put another like $33 or so the other day into Activision Blizzard. NCL, I think I made $3 or $4 when I sold out of that one, and so all of that went into here. So as far as their earnings are concerned, Seeking Alpha has this reported here, beats estimates by 6 cents, beats on revenue as well too. So let me zoom in just a little bit here for you. And quarter three non-GAAP EPS 71 cents, beating by 6 cents. GAAP EPS 78 cents, and then revenue of 1.77 billion year over year. That's a 46% increase and beats by 70 million. So the gaming industry has really profited from the stay-at-home economy. If you don't have to commute to and from work, then you can stay home with the kids, or if you're single, and play more games online. I know bikes went out crazy here in Hawaii. Like, you couldn't go into any store in the mall, Target, Walmart, and find a bicycle, just because people have more time to spend with their family when you don't have to get up an hour earlier, commute into work, get everybody ready, and then commute all the way back home afterwards too, because you're probably working from home. So overall for quarter three, monthly active users was 390 million. For Activision, and Blizzard, you can see them separated. King Digital, this is Candy Crush, I believe, that they own. King Digital, 249 active users. And so these numbers you can see beat from the previous quarter, with the exception of, well, I guess King and Blizzard didn't actually beat from the previous quarter, but Activision with the Call of Duty, and they came out with the Crash Bandicoot games, and some other games will be coming out as well too. So Activision, EA games, some of the other ones, I think there's a Glue Mobile. That's a really new, young spec um, gaming mobile app company. I'm not invested in them, but I've kind of watched them. Even what's the other mobile one that I paid attention to? All their numbers were pretty good, just because people basically had more time. So Yahoo Finance here talks more about Activision's numbers. So consolidated revenue surge almost 56% year over year to 1.72 billion, and then total revenues jumped 52.4% to 1.95 billion, which the consensus Zacks consensus estimate of earnings and revenues was pegged at 64 cents. So for the quarter, I kind of already went through those numbers there, and then I wanted to show you here the top line details. Product sales is almost 21% of revenues, was over 400 and, well, I guess right at $408 million, which is a almost 57% year over year increase. Subscription, licensing, and other revenues, 79% of the business increased 51% to $1.5 billion, just making a lot of money from quarter to quarter here. And it's mainly, like I said, because of the stay at home economy. There were people here, just here in Honolulu, like I would go into Walmart or Target, and sometimes I just kind of stroll by certain aisles if something triggers that I forgot to write down that I wanted to buy, or that I needed, basically. And I noticed that there was just no PS4s, no Xboxes. The games were limited almost on all the shelves. And I did go to GameStop to buy a game at one point as well too. And again, nothing available. So these companies have really profited from the stay-at-home economy. And so with the stock market being a dip, my personal opinion, if you have the money, put in a little bit. With fractional shares, 90% of my portfolios I have bought with fractional shares. This company I bought in with fractional shares as well too. So put in 10, 15, 20, $30 or whatever, and then eventually, because it's the holiday season and people are going to be, there is high unemployment there, but there are still people out there that have the money to buy gifts for the holidays. And then there are people that probably don't necessarily have the money, but their kids are begging it for them, and they don't ever tell their kids no, so they're going to buy it anyway as well too. So further on the basis of platforms revenues, back to Yahoo Finance here, revenues from mobile and ancillary revenues rose almost 26% year over year to 661 million. So, and this company isn't even the big boy. EA is kind of the big boy. Activision has the best franchise, in my opinion, of Call of Duty, going way back to like the PlayStation 2. But they're not even EA. Makes brings in more money than what Activision Blizzard does. And then if you want to break down by geography, revenues for the America almost 58%. 72% year over year to 1.13 billion. Europe, Middle East, Africa revenues 30%, up 30% from the previous year. And then Asia Pacific revenues 12%, increased 36% year over year to 238 million. So nice time to get into this company, as gaming is just going to be really good. Balance sheet and cash flow for the end of September 30th. Equivalents, cash and cash equivalents were 7.42 billion compared with 6.34 billion as of June 2020, so almost $1 billion extra in cash flow from one quarter to the next. Amazing. Long-term debt is still kind of high, but they do have the cash flow to be able to get out of it. So debt is kind of something that I really look onto. I really pay attention more to revenues and cash flow, because if those are good, then they're not going to have any problems paying off their long-term debt. And as you can see here for Activision Blizzard, they'll have no problem paying off this long-term debt. So it was 3.6 billion, so it has gone up since June of 30th, but cash and cash equivalents, they've got 7.42 billion. So that's, they've got enough to pay off their debt and still have some extra. So fourth quarter guidance for 2020, non-GAAP revenues 2 billion, earning 63 cents per share. Net bookings are expected to be at 2.73 billion. Personally, my opinion, I think that they meet these numbers, if not just meet, but they exceed these numbers significantly, mainly just because it's holiday season and people are going to be shopping. So, like I said, some don't have the money, and those that do are going to spend. So pay attention to the rest of my channel for other videos to come. I hope you had a great Halloween. Enjoy the rest of your week. Mahalo and aloha, everybody.